Okay, hi. So for the introduction, a competitive corporate tax regime based on the international best practices is expected to cement the UAE position as a leading global hub for business and investment. For this development and transformation to achieve its strategic objective. So by reaffirms the UAE commitment in meeting international standard for tax transparency and preventing harmful tax practices. For this, corporate tax is effective for financial year starting on 1st June 2023. For example, a year starting on 1st July 2023 and ending on 30 June 2024, which is the beginning of the first financial year that start on or after 1st June 2023. And UAE corporate tax from 1 January 2024, which is the beginning of the first financial year that starts. So we move to the definition. So in the UAE, taxation has been introduced to diversify the economy and reduce dependency on oil revenue. The country implemented a federal corporate tax on business profits set to commence on 1st June 2023 at standard rate at 10% and exceeding AED 3,075,000. So introduced on January 1st, 2018 alongside excise tax and specific harmful goods like tobacco and sugary drinks. So this measure aimed to create a sustainable fiscal framework aligned with the international standard and promote economic stability. Financial year starting on 1st January 2023 and ending on 31st December will become subject to UAE corporate tax from 1st January 2024. So we move to the corporate tax rate. So if you guys can see on the table, the first table is a taxable person and the second one is applicable corporate tax rate. So the first one is for natural person and judicial person. So for the corporate tax rate, 0% for taxable income up to including AED 375,000 and 9% for taxable income exceeding AED for 375,000. For the next one is a qualifying free zone person. We call it as a free zone. So 0% on the qualifying income, and the second one is 9% on the taxable income that is not qualifying income as specified in the cabinet decision number 55 of 2023. So that's the 100% corporate 0% corporate tax does not exceed the threshold of AED 375,000 applied to each taxable person or each business. For each taxable person will subject to 0% corporate tax rate on their taxable income up to and including AED 375% irrespective of whether they conduct one business or multiple business. This does not include qualifying free zone person who will be subject to 9% corporate tax rate on all of their qualifying income. So this UAE corporate tax is generally considered as one taxable person or for corporate tax purposes, where multiple legal entities apply to form a tax group and be treated as a single taxable person. This entity will only benefit from one AED 375,000 threshold only. So we move to the objective of the tax. So this is a vital role is sustainable development lies in its ability to foster a sustainable revenue base and uphold tax transparency and fairness. So this one will involving update to existing tax procedures and regulation to improve societal, environmental and fiscal health in coordination with the Federal Tax Authority. So there are three significant tax to the society. The first one is a revenue diversification. So this one can help to reduce a reliance on oil revenue and also provide a stable and predictable income stream. So beside that, we have economic sustainability. This one for ensure a long-term fiscal stability and also reduce vulnerability to oil price fluctuation. So the next one is alignment with international standard with also the significant tax for the society. So it will help to enhance global economic standing, also foster international business relationship, and also attract foreign direct investment (FDI). So in a summary for the introduction, the corporate tax in UAE is a strategic movement with a significant society implication. It not only provides a stable revenue, and also it can stream and promote economic sustainability, but also aligns the UAE with the international standard and also enhance a public service, encourage a fair business practices, and support the nation economic diversification goals.
My name is Nushaira Amran and my matrix number is 285561. Today I will talk about the crucial concept of equity in taxation and its profound importance in shaping a fair and just society. The term equity in taxation refers to the principle of justice in the allocation of tax burdens among taxpayers. This principle is essential for ensuring that everyone contributes their fair share to the functioning of our society based on their ability to pay. Next, equity in taxation is divided into two main aspects, which is vertical equity and horizontal equity. So, vertical equity highlights that those with higher incomes or greater wealth should bear a larger share of the tax burden. This means that individuals who are more financially capable should contribute a higher percentage of their earnings to the government. On the other hand, horizontal equity ensures that taxpayers with similar financial situations pay comparable amounts in taxes. This principle guarantees that individuals with comparable income levels and financial circumstances are not unfairly burdened or advantaged. Next, why is tax equity so important? First and foremost, a just tax structure fosters social responsibility and a sense of fairness. When people believe that the tax burden is distributed equitably, they are more likely to comply with tax laws and feel a greater sense of civic duty. This in turn strengthens the social fabric and promotes a sense of unity and shared purpose. Moreover, tax equity plays a crucial role in promoting economic mobility by implementing a progressive tax system where higher earners pay a larger share of their income. We can reduce income inequality. The revenue generated can be used to fund social programs that support lower income individuals, providing them with opportunities to improve their economic standing and contributing to overall economic mobility. Additionally, an equitable tax system is vital for maintaining social stability by ensuring that the tax burden is fairly distributed. We can mitigate feelings of resentment and discontent among those who might otherwise feel unfairly burdened. So this helps to create a more harmonious society where everyone feels that they are being treated justly. In the context of the UAE, our tax system is continuously evolving to reflect these principles of equity. For instance, the corporate income tax CIT, despite its flat rate, ensures that companies contribute a portion of their earnings to the government. Similarly, the value added tax VAT affects all individuals based on their level of expenditure, although it can impact low income earners more significantly. Looking ahead, equity will remain a key factor as the UAE explores new taxation opportunities. Policymakers may consider targeted tax incentives for low income earners and progressive taxation on high incomes to ensure a balanced approach. Additionally, examining the impact of VAT on essential goods and services can help protect those with lower income. The introduction of corporate tax in the UAE in June 2023 offers both potential benefits and challenges. On the positive side, it provides a diverse revenue stream that reduces our reliance on oil, enabling more sustainable and strategic government investments in sectors like education, healthcare, and infrastructure. This can drive long-term economic growth and enhance global competitiveness. However, we must also be mindful of potential challenges such as businesses relocating to avoid taxes or passing on costs to consumers, which could impact purchasing power, especially for those with modest incomes. So, in conclusion, equity in taxation is not just a matter of numbers and percentages. It is about fairness, economic growth, and social harmony. As we move forward, let us continue to strive for a tax system that benefits all, ensuring a prosperous and just society for future generations. That's all from me. Thank you.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Zahia Alana Rosli, 292051. Okay, for tax avoidance refers to the practice of structuring financial affairs in a way that minimize tax liability within the bounds of the law. Individuals and businesses use various type of strategies to take advantage of reductions, exemptions, credits, and other provisions that reduce taxable income. So there's some key characteristic that we could see for this tax avoidance. For example, for legality, tax avoidance is entirely illegal where taxpayers have their own rights to arrange their financial activities to minimize their tax liabilities. For common practices, utilizing tax deductions um, is that are legally allowable, such as mortgage interest, charitable contributions, and business expenses. While for claiming tax credits, businesses can making use of credits like the earned income tax credit, child tax credit, or education credits. While for income timing, um, each companies can deferring income to future years or accelerating deductions to the current year, depending on which strategy offers the best uh, tax benefit. While for the ethical considerations, we could see that while this tax avoidance is legal, some forms of tax avoidance may be seen as ethically ambiguous, especially if they involve aggressive strategies that exploit complex tax laws and loopholes. These can lead to public scrutiny and debates about tax fairness and the social responsibility of individuals and corporations. Okay, let's move on to tax evasion. Tax evasion is the illegal practice of deliberately misrepresenting or concealing financial information to reduce tax liability. To be clear that this tax evasion is how people try to manipulate their own tax liability that need to pay by any ways so that they can um, fake their tax pay. So this includes actions like underreporting income, inflating deductions, hiding money in offshore accounts, or not filing tax returns altogether. So tax evasion is literally illegal and against the law. Against the law. So, underreporting income, like failing to report all income earned, such as transactions, tips, or other unreported earning, is how they manipulate this tax evasion. Moreover, inflating deductions like claiming false or exaggerated expenses such as business expenses, medical expenses, or charitable donations. Next, hiding assets. There's some companies who use offshore accounts, shell companies, or other means to conceal assets and income from tax authorities. While the consequences for this tax evasion can lead to severe penalties, including fines, interest on unpaid taxes, and imprisonment. So this ethical consideration is not truly this tax evasion is not only illegal but also unethical, where it involves deceit and dishonesty in clear out their own financial income or outcome from the company.
The United Arab Emirates has built its success on attracting foreign investment. A key factor, low or non-existent income taxes. But this very strategy creates a double-edged sword vulnerability to both tax avoidance and tax evasion. Let's break down the impact of each on government revenue and public services. Think of tax avoidance as a strategic move. Companies use legal loopholes and deduction to minimize their tax burden. This can be a positive force. It might lead them to invest more in the UAE, creating jobs and boosting economic activity. Additionally, with more companies operating here, the government could see increased revenue from other taxes like VAT. However, there is a flip side. Reduced income tax revenue means less money for crucial public services like infrastructure projects, education, and healthcare. It can also create an unfair playing field. Larger companies with more resources can exploit complex tax structures, giving them an advantage over smaller businesses. Tax evasion is a whole different story. Here, companies or individuals deliberately hide income or overstate expenses to pay less tax than they legally owe. This is illegal and steals directly from the government pockets. The consequences: delay in infrastructure projects, reduced public services, ultimately impacting everyone's qualities of life. But the damage doesn't stop here. Widespread tax evasion erodes trust in the system. Honest taxpayers feel discouraged, making the situation worse. Wealthy individuals and corporations who evade taxes contribute less to society, further widening the income gap. The UAE faces challenges in tackling both issues. Free zones with tax exemptions can make it difficult to distinguish between the legitimate tax planning and avoidance. Historically, the UAE has also faced criticism for a lack of transparency in financial dealings, making it harder to track suspicious activity. Building a robust tax enforcement system requires significant resources, which can be a challenge for a developing nation. So, how is the UAE addressing these issues? They are taking steps. International cooperation through agreement allows information exchange with other countries to combat cross-border tax evasion. The introduction of corporate tax and VAT aims to increase revenue and discourage outright evasion. They have also established a federal tax authority to improve tax administration and enforcement. Next, The effectiveness of these efforts depends on the three key factors. First, strong enforcement mechanisms are needed to deter and penalize tax evaders. Second, continued international cooperation is crucial to close the loopholes exploited by the multinational corporations. In conclusion, tax avoidance presents a complex issue with potential economic benefits. Tax evasion, however, is a clear threat. The UAE needs a fair and transparent tax system with a robust enforcement to ensure everyone contributes their fair share, paving the way for a more sustainable and equitable future.
Assalamualaikum, my name is Adis Nazir binti Zambri. My matric number is 294968. So I will talk about the conclusion. The implementation of corporate tax in UAE aim to diversify government revenue, minimize reliance on oil, and line with international tax standard. With a 9% rate on taxable profit above AED 375,000, this tax promote economic sustainability and long-term development goal. It's enable for greater investment in healthcare, education and infrastructure, which promote overall economic growth and attract foreign direct investments. It also found social program, reduce income inequality and improve public service, resulting in more egalitarian society and increased public trust. However, building a comparative attack environment system is difficult, especially in a country that is a new broad-based taxations. Compliance and transparency are critical in preventing tax avoidance and evasions. While a competitive tax rates favor large corporations, it may raise operational expense and affect consumer. Even with exemption, small and medium-sized firms suffer administrative complexity. To prevent discouraged business and foreign investment, it's critical to strike a balance between tax collection and maintaining a competitive business environment. That's all. Thank you.